The market is currently closed as it is Sunday, November 23, 2025. BigBear.ai, trading under the ticker symbol BBAI, finished the last trading session on Friday at $5.40 per share. The stock experienced a decline of exactly 2% for the day, closing near the lower end of its daily range after hitting an intraday high of $5.67. While a single-day drop of 2% might seem like standard noise in the volatile world of small-cap artificial intelligence stocks, the broader picture reveals a much more aggressive battle being fought between bulls and bears. This most recent close caps off a turbulent month where the stock has surrendered over 17% of its value. Yet, and here is the critical context, it remains up roughly 150% over the last 12 months. This brings us directly to the tension between expectation and reality that is currently defining the BigBear.ai narrative. The expectation, held by many retail traders and skeptics who have been burned by the hype cycles of 2024 and early 2025, is that BigBear.ai is a dead money trade. The prevailing bearish argument is that the company is suffering from shrinking revenues, down 20% year-over-year in the most recent quarter, and that it is merely a second-tier player trying to survive in the shadow of giants like Palantir or C3.ai. They see the insider selling, specifically the recent transaction by director Dorothy Hayes, as a signal to exit. That is the expectation, a struggling government contractor failing to commercialize its tech. However, the reality is far more nuanced and potentially explosive. The reality is that BigBear.ai is not shrinking, it is aggressively pivoting. The company has utilized its surprisingly robust balance sheet, fortified by a massive capital raise that left them with hundreds of millions in liquidity, to buy growth rather than wait for it. The acquisition of AskSage is not just a bolt-on, it is a fundamental shift toward generative AI capabilities that are actually authorized for use in secure government environments. While the market sees a revenue miss, the smart money sees a company that is essentially resetting its entire operational model to become a software-centric powerhouse for 2026. This disconnect between the headline revenue drop and the underlying strategic transformation is where the opportunity and the danger lies. Analyzing the recent price action requires us to look beyond just the daily chart. Friday's move downward was likely exacerbated by technical selling as the stock failed to hold the $5.50 support level, a psychological floor that many traders using platforms like Interactive Brokers or their Interactive Brokers trading tools would be watching closely. When a stock like BBAI breaches a level like that, it triggers stop-loss orders from short-term traders, creating a cascade effect. However, if you zoom out, the volume tells a different story. We are seeing sustained interest. Over 97 million shares changed hands on Friday alone. This is not the volume of a stock that is being ignored. It is the volume of a stock that is being fought over. Institutional activity has been particularly telling. While retail investors on Robinhood or those using the Robinhood app might be panic selling on the dip, we have seen major heavyweights like BlackRock and Vanguard increasing their positions in recent filings. They are likely looking at the depressed valuation relative to the sector hype and placing a longer-term bet. It is reminiscent of how early institutional money moved into Nvidia stock before its most recent parabolic run, albeit on a much smaller and riskier scale. The elephant in the room for BigBear.ai has always been its reliance on lumpy government contracts. In the third quarter of 2025, revenue came in at $33.1 million, which beat some analyst estimates but still represented that 20% decline I mentioned earlier. The company attributed this to lower volume on certain Army programs. In the world of investment, specifically when you're looking at individual brokerage accounts or seeking investment help, you learn quickly that government contracting is a feast or famine business. You can have a dry spell for 6 months and then land a massive IDIQ contract that changes the company's trajectory overnight. This is why comparing BBAI to Apple stock or Tesla stock is fundamentally flawed. Those companies have consumer-driven, recurring revenue cycles. BigBear.ai operates in the murky, slow-moving, but incredibly lucrative world of defense procurement. The market punished BBAI for the revenue drop, but it largely ignored the earnings per share beat. The company reported a loss of 3 cents per share, which was significantly better than the forecasted loss of 5 cents. They are tightening the ship, reducing cash burn, and preparing for scalability. This scalability is heavily dependent on their new acquisition, AskSage. For those unfamiliar, AskSage is a generative AI platform designed specifically for the public sector. It addresses the #1 problem government agencies have with AI: security. You can't just run classified data through a standard public large language model. AskSage provides a secure wrapper that allows government teams to use tools similar to what you might find on open networks, but with the necessary compliance protocols. This deal is expected to contribute significantly to annual recurring revenue, with projections suggesting a 6-fold increase in AskSage's standalone revenue for the year. By integrating this into BigBear's existing Conductor OS platform, they're creating a sticky ecosystem. It's a classic land and expand strategy. If you are using Fidelity Investments or researching through Fidelity Wealth Management portals, you might see analysts referring to this as a synergy play. The idea is that BigBear.ai can now upsell AskSage to its existing defense clients and cross-sell its predictive analytics to AskSage's user base. Furthermore, we must discuss the international expansion, which the market seems to be undervaluing. Just days ago, BigBear.ai signed a memorandum of understanding with Pahang Aerospace City in Malaysia. This isn't just a press release, it is a foothold in Southeast Asia. They're partnering to build an AI-driven aerospace hub. This involves deploying computer vision for border security, predictive maintenance for aircraft, and secure orchestration for logistics. In a geopolitical climate where Southeast Asia is becoming a critical contest zone, having entrenched technology infrastructure there is a massive strategic asset. It moves BBAI away from being solely dependent on the U.S. Department of Defense and diversifies its revenue streams. Investors who use Schwab Intelligent Portfolios or similar intelligent portfolio algorithms often look for this kind of geographic diversification as a hedge against domestic budget cuts. If the U.S. defense budget gets slashed or delayed, which happens often, having revenue coming from the UAE or Malaysia provides a safety net. Let's pause for a second and look at the broader market context. We are seeing a rotation. For a long time, the trade was just to buy the hardware makers. Everyone loaded up on semiconductor stocks. But now, as we move through late 2025, the capital is trickling down to the software application layer, the companies that actually use the chips to do something useful. BigBear.ai sits in that application layer. They're the ones translating raw compute power into actionable intelligence for a field commander or a logistics officer. However, because they are a small cap, they are subject to extreme manipulation and volatility. If you are engaged in self-investing or looking to invest online, you need to understand that BBAI is a high beta stock. It moves faster and harder than the broader market. When the Nasdaq sneezes, BBAI catches a cold. When the Nasdaq rallies, BBAI often sprints. This makes it a favorite for traders on interactive brokers trading platforms who want to capture short-term swings, but it can be nauseating for long-term holders. Speaking of holding, I want to hear from you. Comment below how many shares of BigBear.ai you currently hold and what your average cost basis is. Are you underwater from the highs of early 2025, or did you manage to snipe the lows? And also, do you think the acquisition of AskSage is enough to turn the company profitable by 2026? Let me know your thoughts in the comments. Now let's look at the financial health and the cash pile argument. One of the most surprising aspects of BigBear.ai's current status is its liquidity. Following a significant equity raise, the company ended the recent quarter with a cash position that gives it a runway that many of its peers lack. In the world of online investing and investing sites, cash is king when interest rates are variable. A company with no cash and high burn is a bankruptcy candidate. A company with high cash and high burn is a turnaround story. BigBear.ai is firmly in the latter category. They have the resources to weather the storm of delayed contracts. This capital buffer also allows them to attract talent. In AI, the war for talent is fierce. You're competing against Google, Meta, and OpenAI. Having the capital to pay competitive salaries to data scientists and machine learning engineers is essential. This is often an overlooked metric in Fidelity brokerage research reports, but it is vital for long-term survival. We should also address the competitive landscape. The comparisons to Palantir are inevitable, but imperfect. Palantir is a massive, established entity with a valuation to match. It is the safe choice for institutional investors. BigBear.ai is the speculative bet. It trades at a significantly lower market cap, meaning the potential for a 2x or 3x return is theoretically higher, but so is the risk of going to zero.